Tuesday. Welcome back to the final hour. We are staring at the markets a little bit down in the day. Not as bad as yesterday. We had like 0.5% side in the S&P, almost 0.8, 0.9% on the NASDAQ. So they're still just slightly drifting lower. We got the SPY down 0.19%. In the final hour, we have 0.43 on the QQQ. The Dow's actually flat on the day, 0.02. Russell is actually carving out a small gain on the day, 0.13. Volatility index is off the lows just by a little bit. This has been, let's see, a couple days ago. This goes back to December 6th. Would have been a low in volatility around 1272. Man, that was actually much closer to my chart alarm than I thought. I had a chart alarm set at 1250, looking to get long vol, and this 1271. So anyway, we're up off those lows a little bit on volatility by around 11.5%. We go to the SVXY. We're at 53. I might end up taking some ownership of SVXY. This week I've got a $54 and $55 expiration on a cash secured put. I'll take a little ownership there. I'll still probably buy some downside protection, sell some premium, probably do a collar trade on it. It's already profitable. I collected like $3 or $4 on the that was during the big drop we had late July into August. So I'll keep an eye on that one. Let me double check the portfolio here for SY. Where are we? I did close out some profit today on Dollar General. That was a credit spread I did in my Pulver alert, 79 by 78. Ended up taking about 71% of the max profit. That was a little income winner. I also closed out a little butterfly spread on ES for a small win. I just had expirations coming up this week, and so I was doing some management. That's pretty easy to sort in the Tasty Trade platform. I just went to DTE, and here's my 2-day, 3-day. So I have a couple of these trades. I don't know why that 60-80 and 60-50 is still showing contracts. Give me a second here. Where is that account at? That one's out. That one's closed. That one's closed. That one's closed. There we go. Okay, well, that's actually even more profitable than what I had earlier today. I closed out for 360 for a win. This one's up 220. I'll close this one out now. Let's go 225. Oh my gosh. 230. Come on, be liquid. There we go, 235. So I collected like $36 credit, closing it out for $2.35. So collecting most of that credit up front. That should be the last account that I have that needs that one. Yes, that's closed out. That one didn't have it. That one, this is a micro hedge. That one's up about $100 on the hedge. And that one's closed out. Okay, so that trade's good. Very nice. We had a bit of a flip the script in China overnight. Let's have a look at that. There you go. Papa John, 3 for 3. Very nice on daily profit play. It was a pretty good day for it. We did have some pretty cooperative price action right here. So we started out this morning with a nice little winner in daily profit play. 3 for 3. I'm guessing that if you're already out, are you in any trade right now taking it to the close? So you got the 3 for 3 and then one sunset trade, meaning you're taking it towards close. Hopefully that one cooperates. But yeah, it's been a pretty nice, from 940 all the way to about 140. I mean, that's a pretty decent 4-hour window to be trading the grind. So yeah, works out. We are breaching those lows. The previous low from last week is I've got a chart alarm set there at 6033 on the SPX, as well as the high. And if we take a look at the QQQ, same thing here. Just watching to see where the highs and lows are at. There we go. So the QQQ, because we had a pretty decent run last week, this thing was up around 3% last week, over 3% last week. And if the Qs are going to give some of it back, then we could still drop a decent amount without taking out last week's low. The S&P is much closer to taking out last week's low. So anyway, we'll see. And we have CPI data tomorrow. So the market's reaction will be interesting. I'm curious what the print is. The forecast is 2.7 year over year. I'm going to take a look at Bloomberg economic calendar and see what that looks like and shows for tomorrow. So let's go all the way down. So Wednesday, 8:30, core CPI 0.3, core CPI. This is a big number. If we have core CPI year over year 3.3, let me see what that one is. Are we trending in the wrong direction on this as well? Kind of, right? 4, 3.9, 3.9, 3.8, 3.8, 3.6, 3.4, 3.3, 3.2, back up to 3.3, 3.3, forecasted again for 3.3. I don't know. I mean, I guess the market may celebrate a core CPI that's no higher, staying the same as forecast and same as previous, perhaps. So tomorrow morning when I come to my live sessions, I will check this Bloomberg economic calendar, just because we have a few more line items, and then we have our month-over-month CPI at 0.3% expected, and then the year-over-year CPI print. This is full CPI at 2.7. So if this is higher or higher, curious what the market takes it as, good or bad. Okay. And then we have the BOC forecasted to cut 50 basis points tomorrow around 9:45 a.m. Inventories, some oil news at 10:30. We then get into the Swiss National Bank on Thursday morning. It's going to be another 25 basis points cut by the Swiss. Hopefully that starts to see another push to the upside with Aussie, Swiss CAD, Swiss Euro, Swiss Pound, Swiss New Zealand, Swiss Dollar, Swiss, the basket that I'm trading. That'd be a nice little win for later this year into Q1 of next year if we get a nice push on the Swiss. Eurozone is expected to cut rates as well. That is around 8:15, 8:45. There's your interest rate decision, 25 basis points expected to cut around 8:15 a.m. Then we have some jobless claims, PPI data Thursday. So yeah, Wednesday, Thursday this week, pretty big news. And obviously I'm as curious as anybody else, like what does price want to do? I'm looking at some, major order flows, seeing if anything sticks out. Right now, I mentioned this morning, I am seeing a little bit of continuation and growth at the 600 strike. It's not enough that I would be just heavily bearish towards it, but it is grown quite a bit. I mean, I started out current net at like 380, and now it's up to 727. It's not quite that. It's not quite the outlier that I like. I like to see it, 1,000 plus on my software, and it's at 727. It's getting up there. So anyway, let's just have a quick conversation about this one tomorrow. So SPY, we have the news at 8:30 is going to move the market pre-market. It will definitely move the market. But if we come back into this structure low, let's say that we finish the day at a low, we come back up, or we finish even a movement higher today, and then we fade that move again tomorrow. 600 on the SPY would be a fairly attractive level going into Wednesday, Thursday, Friday for the week. But it's just not crazy obvious. I mean, it's there, it's noticeable. I wouldn't be surprised if the SPY finds 600 this week, but it's just not quite convincing enough to trade at it right now. However, let me actually look at something right here. This might be risky business, but let me see if I can throw a trade on the SPY for a 12/11 expiration. If I did I'm going to go put spread. So if I sell the 600, let's see. So that's an expiration for Wednesday. Do I like that trade enough to take it tomorrow? Do we hit 600 tomorrow? Hmm. I mean, it's pretty inexpensive. This offers about an 8-to-1, 9-to-1 reward if I'm pinning this thing, which I don't plan to pin it. I'm just looking to see, can I turn this into, maybe a 1 to 200% gain. Um, I don't mind this trade. Otherwise, if I just buy the put at 40 cents, let's see, buy the put at 40 cents, the delta's 20. So what's my move? That'd be a $3 move at a 20 delta. I mean, I can turn a 41-cent puts a long put into 61 cents if I'm right. If we are going to 600 tomorrow. All right, so I'm either going to take a butterfly spread and see if we hit it and have a little bit more time on my side, or I'm going to spend the 41 cents and just take the long put. Let's see. I think I'm going to do the butterfly spread instead. So I'm going to take this trade. I'm going to throw this into my double up alert service. I'm going to do a 600 by 602 by 598. This is a butterfly put spread, and I'm going to go slightly out of the money. I'm only going to have to pay about 26 to 27 cents debit. I'm probably just going to take a one contract trade just to kind of toss it out there, maybe a 1 or 2 contract trade, just because I don't think I'm going to pin this thing. My goal would be, if I am right, then I'm trying to turn this into a 100+% gain. Let me see if I go 2 contracts. All right, I'm going to go after this guy for tomorrow. I'm going to try to get to 26. All right, let me try this one. 26 bucks. Let's go put fly. 26 cents just got filled. Okay, I'm going to throw this out. This is going to be coming into my one-click trading portal for my double up alerts. Double up alerts. New trade. 12/11 expiration. This is going to be sell 2 puts at 600. Buy 1 put at 598. Buy 1 put at 602. And that is 26 cents debit. Okay, that alert is in. Members will see that in just a few seconds. So that way it's not as time sensitive to just take the put at, I mean, I'll make a note of this. I'll kind of reference like, okay, I could have just bought the put for 44 cents. And if it goes up in value, it's up 3 cents right now. But if it goes to my strike price, I mean, that would be basically adding 60 cents gain. So let's say 60 out of 40, I'd make 150% return on risk. Not a bad trade. But I'm going to take the butterfly instead, keep it a little bit more cost effective. All right. So that's in there on the SPY. I'll add that into my trade log. $12.11 expiration. Okay, trades in. Cool. All right, so keep an eye on that one. And then I don't think we're getting to 610 tomorrow. I'm just going to go ahead and add this one and get us down to 600 and see where we're at. All right, alert's been posted in the member area. If we had a 0.5% move lower tomorrow, we can gap lower. Obviously, I don't know what inflation is going to give us. If we, gap up and then fade the day, we might get lucky. If we gap lower, I'm looking for that initial close right in the morning. Like I said, if I'm up, 100% on the butterfly spread, I'm just going to take the profit and move on. All right. So that's SPY for tomorrow. I'm just seeing my bigger liquidity level growing at 600, and hopefully that is enough to mean something. So be a magnet and then be a goldfish. All right, that's SPY. Let's take a look top down. What else we have going on here? DXY 106. Let me get the chart back up to the SPY. Go to the DXY right here. 106.39, still pretty choppy on the dollar. May not really make a big move until after all the central bank rate decisions have settled in. So, Bank of Canada tomorrow, ECB on Thursday, Swiss National Bank on Thursday, Fed next week on Wednesday. The dollar, I would say if we're looking at a trade, you've got some decent support at these lows. You got some equal high resistance. It's going to be pretty noisy in here. You have some slight upside potential if you are looking at trading this area 1, buying the lows, trade 2, stop loss within validation below that, and looking to see if we get back to these range highs. That's about the only trade that I kind of like right now on the dollar index. I think I'm going to stay out of the euro dollar. I still like Aussie dollar and New Zealand dollar. I'm leveled into those. I still like dollar Swiss long, dollar CAD long. This week we could have a nice pop, especially tomorrow. We're trading back up towards 141.67 on dollar CAD. BOC Bank of Canada cutting rates. I mean, if this surges through my buy stop levels, then we might be closing in on 44.50 to 4,500. That turns this into a nice little gain. So I'd have, let's see here, 7,500 over 10, 12. That'd be 15,000 units for a position. So about 0.15 lots. And my break even is going to be somewhere around like 40. See, 40. So the difference between these two is right in this area. That's around 41 and change. That's almost current price. So I'd be looking at a net profit of about $330. Well, actually, some more than that. Let's go about $1.25 times 330. So I'm looking at about a $400 move, and that would be about a $20,000 profit on my currency fund if we hit 44.50 to 4,500. So here's to the dollar CAD going to 4,500. Let's see if we get some buy stops filled. There's probably going to be some noise. If they cut rates or they cut rates less, I mean, they're expected to cut by 50 basis points. Intel crossing 25. Oh, you got to be kidding me. Intel. All right. I've got some members that closed out Intel today for some gains. Right now, this trade is showing $1. Son of a biscuit. Son of a bee. All right. Intel. Man, it chopped around all flipping day, didn't it? Okay. So if anybody, I mean, it doesn't matter. I close out the trade for a win. Intel is coming right down to my strike price at $20. Double up alerts. Observation. All right, so I'm not sure if the tight stop loss from earlier held up. I'm still happy with the win, but the liquidity level is the magnet. All right, so I'm just going to throw that out there as just a recognition. So yeah, I mean, I was in at 63 cents. I got out for 83 cents. I'll take the little return. I think my net profit was 37.5% return on risk, 21.7% return on risk. It was fine. Right now, if I close it out for $1.02 minus the 63, that'd be a 61.9% return on risk. Obviously, I'd be a little bit happier with that. But it did chop around all day. I mean, if we look at Intel price wise, I mean, today looks like a pretty straightforward day, but if you go down to a smaller time frame, it was very choppy. We initially came screaming out to the downside, going right towards that $20 strike, and we're heading to it now. So, I mean, the good thing is the trade works out. I was in for some tight stop losses. I think I'm fine. I think this little spike up around 1 o'clock would have probably been enough to stop me out at break even or better. So all in all, I'm actually pretty happy I just got out of the trade. But if anybody is still holding this position, we had a 20.50 long put and a $20 long put. We're trading right at 20.04. My liquidity level I was targeting was $20. And so it is, approaching that magnet just like I thought. And I've got a nice little win stacked up with 2 long puts. So good trade overall. If anybody's still in it, if you closed out with me, we still had a nice little average gain was, what's that? 58, so about 29.5% return on capital. It's fine. Small win, but I'll take it. I'll take it. All right. Anyway, that was a little chart alarm that went off on Intel. Let's go to NVIDIA, which has not been performing too hot this week. I've got a credit spread and a long call. We'll see how those stack up. They might end up being some small losses. SPY at 603. Papa John, I'm watching your trade on SPX with a bottom at 60.30. Got to keep a close eye on that one. 11 December expiration on what? Yeah, NVIDIA is down. I kind of like the idea of, let me get to a higher time frame here. I mean, NVIDIA is this. I mean, if I take a small loss and double up alerts, it's okay. I mean, I'm looking at NVIDIA this way too. I mean, I still have some levels to the upside, but I don't want to, beg that in the next week or two, the NVIDIA goes up, when the reality is this. NVIDIA is, just far as a trade goes, if we come down to the 100 or 144 or 200, I am much happier taking a trade there for a, 2 to 4 week window, maybe even more than that, and just stacking in some spreads. And, if I take a small loss on the double up alerts, I can get in with just some basic spreads and stack them up over 30 to 60 to 90 days, and also be willing to own some shares of Nvidia. So I'm curious, just like everyone else. Like, we're trading at 134. Nvidia is volatile enough that we could have a move back up into 140 to 145. I think it's unreasonable to think we're going to get to 150. I think 150 is going to be a tall task this week, and I do have a Friday expiration. That trade was already down to like 8 cents. I'm not going to close it out. I'm just going to take the full risk on my call on Nvidia. If it comes down lower, my 100, my 144, my 200, I'm going to stack up some levels there. Okay. Let's see here. Nice. Exited 79 cents credit on Intel. Okay, that's a small win. MARA. Yep, I'm looking at MARA to hopefully make a run towards $30 for this week and next week. The trade I have this week is a 26 by 25.50. I need to see a little bit of a bump to the upside. I also have a 19 by 21, which is a bull call spread, and that one's looking to be, fully profitable. See if that one pays out. And then a 1750 by 16 bull put spread, and then a bull call spread. So both of these hopefully end up stacking up some profits. I'm looking to see if we make a run back up towards $29 to $30. All I need on MAR is to get back above. This one is at 27. My strike is at 26. So I'm just going to edit this down, $26 above sell put level. That's all I need for this week on MARA. So NVIDIA, not looking hot, 143 by 142. We need some volatility to the upside. My 150 call is probably not going to be a winner. AUR, this is another one, trading at 736. I'm looking to see if we can get up towards $9 by next week, not this week. BAC, need to see if this one gets up to $47 by next week. Again, not this week. Ford F, I'm looking for $11. We're at 1062. I have an 11 by 1050. Let's see. So my break even on that one is 1070. I'm only 8 cents off right now. I'll make a decision on this one tomorrow. and see if this is worth keeping. I mean, post FOMC, or I'm sorry, post CPI data, hopefully Ford gets a little bit of a nudge to the upside. If we get break even or better, I'd be okay with that. I need it to be above $11 for full profit, but I would take a partial right now since this is a very low volatility stock. Okay. Heather, that's a good point. Palantir, MicroStrategy. Oh my gosh, you kidding me? Those are being added in for QQQ rebalancing. I mean, you're just asking for more volatility on the QQQ. I mean, I'm not, look, nothing against MicroStrategy, but it's essentially Bitcoin. So basically, that means that the QQQ is involving a stock that trades like a volatile proxy to Bitcoin. Um, that means a lot more volatility ahead for the QQQ. Can be a good thing, but it could be, I mean, like I said, volatility and leverage can be a double-edged sword. So that's pretty crazy. Palantir also had a big pop around like 81, 82, was faded a little bit off those highs. Let's see your WBD, looking to see if we can go down a little bit towards 1050. NIO, I took a new trade today on NIO. We're trading at 477. I bought a $5 call. I'm looking to see if we hit $5 by the end of the month. So this is a China EV. I gave it a little bit more time. I'm going to move this chart alarm to $5. I'm trying to get this thing actually up to 550. If it hits 550, I'm going to close out my long call. So this would be $5 long call. Look to protect. Okay. So keep an eye on that one. And then I put that butterfly in on the SPY to see if we hit 600 by tomorrow. We're at 602.75 right now. Okay. So I'm looking to see if we tap 600 tomorrow. Hopefully that's a nice little win on the SPY. Keep a close eye on that one. Intel, the low just got hit. We hit 1997. So Intel INTC did hit my liquidity level at 20 bucks. That was the plan. That was the target. If I look at the trade, right now it's trading about $1.04, $1.05. So a little bit, I mean, more profit, about 60 to 70% return on capital. You know, not too shabby. Cool. Yep. Chart alarm went off. That was the point. All right. Good stuff. What else? Anything else? Gets me caught up with my double up alerts. We took a nice little winner today on the daily profit play. Waterfall's looking fine. We're sitting on 33 of 33 winners. We have 3 live trades running. And that is 2 SPY trades, 1 QQQ trade. Watching those for the potential like wall of worry climb by the end of the year. This note right here is 57. Okay, I'll just make a arrow here. That high is 57. So 57 all-time highs for the year. Okay, and I mentioned this in my session this morning. I found this, I talked about this yesterday. Where's my little stat? There it is. So we're at 57 all-time highs, which is right around this point here. So we'll say we're going to take this bar and say we're at 57. So in the last, decade plus, this goes back to 2013, we had better performance in 2021. We had better performance in 2017. We had comparable performance in 2013 and 14. I mean, that's pretty impressive when you think about the last decade having, 1, 2, 3, 4, 5 years out of the last decade. It's 11 years of trading. 5 out of the last 11 years having 50 plus all-time highs. That's a pretty impressive run. The last time we see that kind of littered in there would have been the 80s and 90s before we had a big old crash from 2000 to 2008. Obviously, the crash wasn't the whole decade, but it did do a lot of damage. And then before that, it was in the 50s. So we had a great run from 1954 to 1970. We had a great run from 80 to 99. We've had a great run from 13 to 24 thus far. I also wonder here, when you take a look at this, I mean, this is completely hypothetical, but the fact that we had a cycle that lasted about 15 years, okay, and a cycle that lasted here about 15 years, and we're starting this, and I'm not saying that we can't count like 2009, but if we went from like 2013 to 2028, that would be a 15-year window that perhaps we do have some more, kind of all-time highs sprinkled in here. So, I mean, anything can happen. I don't know how, everyone is like just worried about a recession, and I'm cautious, but I'm not thinking like full on market crash. All right, crossing previous week's low. Okay, that's a good point there. So we are taking out the fresh low for the week. Statistically speaking, let me show you something here. So if I go and show you the previous highs and lows for the week, let's go to performance by weekday, green and red streaks, high low by weekday, previous week's range. Here we go. All right. Previous week's high then touched the low. That's rare. 36% of the time we touch the previous week's low. What I'm looking for is chart alarms are going off here. All right, I might take a look. I've got some hedge profits on MES. Let me see what those are at. It's probably not enough, and I probably still need to hang on to this hedge. But let me have a quick peek at MES. So right now, that's a hedge. That's a bear put spread. Okay, so my MES is up. I mean, it's not anything I'm going to close out. I got into the trade for a max risk of around $275, and I'm up $131. I mean, if I'm going to close this thing, I'd like it to be somewhere around, let's say, $500 profit. I'm hopefully going after $1,000 profit. That's the whole point of a hedge, is have a much bigger reward than risk. So I just want to spot check it. And then MNQ, this is also a bear put spread. It's upside down a couple $100. NQ sitting in some profit. This is a 1-1-1 trade. All that is a 1-1-1. That should max out for. I'm trying to think what income that is. I can look and see what I took that trade for, but it's a bear put spread with a wide credit spread, and it's just a big bear trap. So I mean, I doubt we're coming back to 16,500 by December 20th, which is next Friday. So that's likely going to close out for full profit. Russell likely going to close out for full profit. That's up $600 right now. Silver futures up some dollars there, and then we get into stocks. So, all right, hedge wise, closed out the butterfly spread there. Gold is still looking good for full profit. MES is a hedge that I'm looking to see if I can get a bigger run out of this 6160. This goes out to the end of the month, which is also the end of the year. So if the market is capped out at 57 all-time highs, and we have, let's say, a pullback into the 21 or the 50 moving averages, I'll probably end up taking some hedge profits in there. And that's probably right. I mean, if we come back into this election candle or that election gap, that's a good spot to be protecting hedges. And then I'd be looking to position for a retest. And I've said this for the last couple of weeks. If we're on the hook for a correction, I think a 5 to 10% correction is doable. I mean, nobody expected a 10% correction until the Japanese yen started to show really aggressive signs of deleveraging. It was a really tricky window because it was essentially a Friday to a Monday. And over the weekend, we had all sorts of stuff happen in the futures market. The FOREX market opens up earlier. The futures market opens up earlier. So all the stuff was going crazy on Sunday and Monday. But we had one of the biggest drops, peak to trough in the Nikkei ever. We had the biggest 2-day drop ever. And that was a 10% correction in the S&P. So, I mean, do we have the same type of thing? Well, probably not with the same factors. The Japanese yen, I don't think is going to be deleveraged once again. I'm hoping people learn their lesson from July and August. But there could be some other factors that just play into, maybe hitting 57 all-time highs and taking some profits by the end of the year. Maybe getting repositioned by the end of the year. Maybe something that is like a reality check in Q1. Maybe the inflation numbers being way higher than expected. And all of a sudden the Fed changes its tune. And it's like, we don't want to cut anymore. I don't know. All sorts of stuff could. I said the Fed is the only thing, in my opinion, between inflation data, the Fed, that would disrupt this market for the end of the year. Okay. And when I say disrupt, I don't know if it's going to be like changing structure necessarily, or if it's going to be like high volatility interruption, but we still find a way to grind higher. Maybe over the next couple days, it's just chop and it's really volatile, but the market still, buys a dip or finds a dip, and then we continue to rally and drift higher. Okay. Mike Ross, I see your question there. The answer is yes, absolutely, I do. There's a link to that in my my Discord. Um, yeah, I'll show you right here. If I go to, let me use my Discord, go into my education. Let's see, education updates. And in my affiliate discounts, let me find it here. So if I go to this guy. Yep. So right here. So if you're looking at subscribing, I mean, this is something I use every single day. This is the one that if I've got anybody asking me, this is the one that I subscribe to. Okay, so I mean, I'm fortunate because I know the team at Dynamic Trends. I mean, they give me full access, so I got the big subscription here. But basically, I get to pay that amount. So I'm very fortunate in that regard. But as far as how I trade it, what I use, broker feed or not, data feed, it's live. I can trade any stock. I can find my gamma levels. I can find my liquidity levels. That is where I'm driving some traders to use that software. So if you're interested, there is a promo code Pulver, and that'll get you 2 months off. So you buy a year, you get 2 months off, which is pretty nice. But I do love the software. That is probably the best way for me to find direction in a given week, especially in a shorter term window. Okay. Target on SPY butterfly put. Daniel, I don't know what. Are you talking about the trade I just did for double up alerts? I didn't put a profit target in there. I'm looking to see if we tap 600. If we tap 600 on the SPY and we do that by tomorrow, I'm looking to see if I can turn, a 26 cents debit into, like a 56 cents credit, 75 cents credit, something like that, where I'm going after like 100 to 150% gain. So I'll assess that in the morning. I'm going to see if we actually hit the strike price of 600. That's the level that I'm watching. So there's it's actually pretty perfect, because if you take a look at this previous resistance and this support, if we're making a pullback towards previous highs, or making a pullback towards my 21 moving average, 600 is in the way. So it's very likely that, I mean, if I time this well enough by tomorrow, that 600 could be a really good spot. And with only having a 1 day to expiration by tomorrow, this could easily be, the butterfly trade looks like this. If we are falling lower in price and it goes, to 600 or even through it, but comes back to 600, even during the day tomorrow, this could be trading for, I mean, my max profit would be about $1.70 credit. It's unlikely I'm going to hold on to the trade that long, but if I can turn this thing into like 55 cents, let's say to 75 cents, I'm going to take the profit on that. And that's going to be a nice return. All I need to see price do is try to get to 600 tomorrow. Okay. All right. By the way, this final hour session is not, hey, Chris, review all of your trades and your services, just so you know. Okay. We have alerts and I post them for a reason. I'll spot check things, but I'm still watching and managing trades. If I close out a trade on SoFi or AUR or BAC or NVIDIA or whatever it is, you're going to get the alert on it. Okay. There's other stuff I got to talk about in these final hour sessions. So I run the service for a reason. Okay, I closed out Intel today for profit. I looked at everything else as a spot check. Some of the trades are out till 12:20. I put an NIO trade on today for 12:27 expiration, so we still got time in some of these trades. I'm just going to let them work their magic. Okay. All right. Mark, if you have any questions, who's asking me there? Oh, Mike, if you have any questions on that dynamic trends in my Discord, go ahead and hit me up. Just send me a message. You can send it in the public channel or send me a private message. That's fine. But you've got the link, and just use promo code Pulver. That'll save you some bucks. Okay. All right. Sounds good. So yeah, like I said, I mean 600. I mean, I know I've got to time that butterfly spread by tomorrow, but looking at this price, looking at my order flows rolling in, I mean the $600 strike is getting bigger. It went from 380 today to 802. Now, percentage increase wise, that's pretty dramatic. I'd like to see it over 1,000 going into tomorrow's trading. Pre-market, we have a CPI in the morning, so we might have a gap lower. that gap lower, let's say that we do gap down to 600, right? If we gap down to 600, I'm just looking for it to stay there around opening bell, and I'll probably close that trade out and hopefully see it, showing a nice profit. That's all I need. If it's up, 50 plus cents credit, I'm probably going to take the profit and move on. Okay. And then it's kind of wishful thinking to be like, well, if we would have done this. I mean, I will say over my career, let's say, 10 plus years trading options, I've probably pinned price, less than, I don't know, probably less than 50 times in a 10-year window. So I don't expect to pin the price at 600. All I'm looking for is if price goes my way, I can turn that into a 100+% gain. I'm happy with that. That's really all I look for the higher probability win. Okay. All right, Papa John, you need that 60-30, man. You're playing with fire there, dude. Yeah, we've got another 17 minutes. Hopefully, kind of similar to what we saw yesterday. We just need to see price just kind of give that little push up. If it does, great. I hope it stays above your 60-30 level. We did breach the lows from yesterday. We did breach the lows from last week. Breaching the low from last week, oftentimes will respond in a little bit of a bounce. So I know the number you're looking for. You need to stay above 60-30. Depending on how much you collected on the trade, you might have a little bit more wiggle room there. But that'd be more for like a break even. It gets a little dicey if we're below 60-30. You're going to take on a little heat there. Yep. Okay. All right. So just reviewing all the indexes, volatility's up, dollar, got a little range trade. Let's take a look at oil, gold, silver. Oil is at 68.39. Still, again, like crazy amounts of chop on oil. I don't know if CPI news has any impact on oil prices. I just keep watching this 66.75 low. I keep saying 67 and $66 support. It's either going to hold or it's not. It's pretty straightforward. And then, of course, if we actually take out a recent high, then you'll see if this thing gets back in the low 70s or mid 70s, and then we have to figure out what the inflation story looks like. We will be looking at core CPI tomorrow and CPI tomorrow, 2.7 and 3.3. That's what the forecast says for Bloomberg calendar. Is it higher? Is it lower? Is it as forecast? We'll find out. That news is coming out at 8:30 tomorrow. Okay. CL, I'm still in a bull put spread. This goes out to January, so if there's a little uptick in oil, that would be good for this trade. That's defined risk. Here's gold making a nice little run for the first time in like 9 days. So if anybody is, watching this indecision, we got a little pop to the upside on gold. That's pretty good. Part of this could also be, we're coming into 6 rate decisions and 4 of them involve rate cuts. Does that mean that gold gets to all-time highs again? I don't know. I think that gold could still be kind of choppy. So if we have a, breakout or maybe a fake out in this range, it could be some intermediate range trading. I'm not long gold outside of this position that I added in. I was patient to hit the 100 moving average, so I dollar costed average in with GLD shares and GC. That's about it. I actually did like several credit spreads on GLD. I put in one short-term trade on GC, which so far looking pretty good. If we get back to these highs, then my futures position looks good to probably take a partial profit. I could probably close out for 50+% gains. Okay. And then silver also had a big pop yesterday, less of a pop today, but I still like the fact that it's well supported around $29. Extremely well supported at 26. Still have a measure move up towards 35.80. Bitcoin, I've said this for the week. If we come below 90 and 85, between 90 and 85 would be, or I'm sorry, 90 and 80. 90 and 80, I'm looking for an area to start getting long again on Bitcoin. So if I was going to add any positions, I've got a chart I'm set at recent highs on BITO. If we have any pullbacks, I'll add in some more credit spreads on IBIT. Added some credit spreads as well on FBTC. MicroStrategy, I'm just going to stay out of it for right now. I've got some income trades like all the way down here that are well below the $200 mark. I'll just let those expire for December and January expirations. Coinbase, the 220 by 230, I'm going to let those run for pretty much full profit. Those got to January. And then I've got another trade here that's a 111 out for $3 and change. So I'm pretty sure those are, these 3 trades right here. Without owning a single share of Coinbase, that is 4, and we'll just say that's 7, right? So we've got about $11 of credit right here. So $11 of credit, even if it's one contract, that's $1,100 in profit out for the next maybe 40 days or so. And not taking a single assignment or any type of ownership on Coinbase is just an income trade. Okay, so Coinbase is looking pretty good. Ethereum, bigger pullback in Ethereum, but I still need to stay. I'm looking at EETH. As long as we stay above $60, I'm going to be good on that trade. And then copper making a little bit of a run, but I'm still concerned about the China situation. Japanese yen getting a little bit weaker. I will watch this one. I keep saying this, but I might just wait and see if the Japanese yen retests this low, and I'll get long Japanese yen. And I'll probably trade it through futures so I can get long with options and not have to trade the Forex market when it could be, the Japanese yen is like just my least favorite currency pair. But futures I can do define risk. So if I like the trade and we come back in this area, I would probably do some credit spreads or debit spreads on Japanese yen. Nikkei still sideways. EWJ, I bought some shares. We're getting a pullback there. I'll keep that one like level 1, level 2. I'm just going to buy some shares of EWJ. The DAX, we had a conversation about this one yesterday. There is a decent stretch. Okay, we're about 9.4% away from the 200 moving average. It's not the farthest. I know I had a trader come in yesterday and say it's the farthest away it's ever been. It's not. There's been like 14, 15% stretch away moves before. But it is. I mean, this to me looks like a capitulation type move. And if we stall up here, I could see this either going sideways and then all of my moving averages catch up, or we blow the top off, we pause, and we start to revert a little bit, and we come back and find some structure. But yeah, just like the S&P, just like the NASDAQ, I'm just watching for these to be. I'll put an arrow here. This is what I'm looking at for. Look, if any chart that shows, highs, all-time highs, I'm not chasing all-time highs. Right now, I know that there's an argument that, if the S&P is at all-time highs, we typically see more all-time highs. We'd had 57 all-time highs this year. Doesn't that make sense? You should just be long, sure. But we're at 57 all-time highs, and we might stretch to 60, which is great. We might stretch more to 60. We only have, how many more trading days do we have? I've got a calendar right here. We have, what? So 1, 2, 3, 8, 9, 10, 11, 12. We have like 13 more trading days for the year. So how many more all-time highs are we going to have in 13 trading days? And I know that we have more calendar days, but December 24th and 25th and, December 31st and January 1st, like those are going to be disrupted trades with the holidays. Brokers probably have like limited trading hours. Market's going to be closed on the 25th and the 1st. Most likely, right? Like U.S. equities will be closed. There's going to be some limited trading hours in Forex. Futures trading will probably close early. So we have probably 12 to 13 full days of trading. But I wouldn't even say that like the 26th and 7th are going to matter that much. The 30th won't matter that much. I mean, I think this week and next week are really it. So at 57 all-time highs, we have a pullback this week. Unless the CPI news is uplifting to the markets, perhaps the Fed is the catalyst to put things back in motion for the rest of the year. But I just think if we're struggling this week and next week with the markets not at all-time highs, we might not be making all-time highs again for the rest of the year. Now, that's not a big deal. We can obviously make all-time highs in January, like the market doesn't care, just picks up right where it left off. But I'm just, I'm just being aware that this might be it. It's been a heck of a run. We're up 27, 28% on the S&P. Can we pull back a little bit? Yeah, we could probably finish still positive 25%, but we might have a little bit of a pullback, right? All right. Nathan, Ripple, I talked about Ripple a lot yesterday. What do you want out of it, man? I mean, I'm not doing anything on Ripple. I already rolled over my Ripple and converted it to Bitcoin back over here in 2021. I know it's been a good run. I just don't have a story on why I'd be long on Ripple. It was hard enough getting through the SEC probe and getting my ability to convert it. If I was still sitting on it, could I do anything with it right now? I don't know. I'm actually more profitable from the conversion and putting that into Bitcoin because Bitcoin's been up about 99% since I converted it versus this one is up from where I converted it about 75%. So, I mean, for me, I'm not, I'm not hurt by like, oh, Ripple's made this great run. Look, it's been a heck of a run, right? From 53 cents to $2 and change. That's a heck of a run. But from here, I have no idea what to expect on Ripple. Okay, my thoughts on Bitcoin and Ethereum would be that's like trading the S&P and the Nasdaq of crypto. They're the two largest market caps by far. Ripple is, a moonshot. It's a meme coin. Maybe it is, maybe it isn't. Maybe there's arguments out there like, no, Chris, it's this great thing and it's going to serve this utility and it's going to do this. Maybe it is. I have no idea. So I don't have an opinion. I think that if you participate in this run, congratulations. It's freaking sweet. If you didn't participate in it, I'm not throwing money at this right now. That's insane. I'd rather wait for a pullback on Bitcoin. I'd rather wait for a decent level on Ethereum. I'd rather stick to those as like the larger market caps, kind of the more liquid ones. I'm not trading anything else. I made that decision, thankfully prior to 2022's decline. But I also bought back in on 2022's decline with more Bitcoin, with more Ethereum. And that obviously worked out pretty well. But other than that, I mean, I don't have any interest in participating in the randomness. I feel like there's already thousands of stocks that I'm sifting through to find some trades and options. Crypto is not a tradable instrument. It's a buy and hold passive investment. So if you're in Ripple, you're not trading options. You're not trading call options. There's no leverage. You're just buying and holding. Even so, same thing with Bitcoin, right? It's like, fortunately, I have some ETFs I can trade some options on, but it's essentially a passive investment where it's like you put in the trade now, a year, 2, 3, 5 years later, you hope it goes up in value. Then you gain on it. But they're all passive investments. So if it's risk capital of, hey, throw, $1,000 at Ripple and hope it goes up 400% more, maybe it does. My concern is that after a 400% run, it crashes 50 to 70 to 80% and you're stuck right back where you started. And there's no justifiable reason on like why you'd get back into it, So I'm not chasing these highs. I think like, look, it's fun to see it. I feel like I missed out, but I can't chase this thing, So I'd rather trade Bitcoin and Ethereum where it just feels like it's more of the steady, and it's not going to be steady. It's going to be volatile. I know that. We should all be prepared for crazy amounts of volatility in the crypto space. But as far as the market cap goes, it's the bigger play. So to me, it's like Bitcoin would be the easiest one to get your head around, and we'll see how much larger adoption and regulation that it gets. But yeah, I mean, if you come and tell me, look at Doge, look at Shiba Inu, look at blah blah blah, it's like I don't care, And like I said, for anybody that's in them, congratulations. It's so cool to have any instrument that goes up hundreds and hundreds of percent, any instrument. But I can't chase it and think like, oh, I'm missing out. I missed it. It's that simple. If I miss the move, I got to move on. Yep. All right. Nvidia, Nate, we talked about Nvidia too. I do have a trade on Nvidia. I'm watching. I've got a couple positions here, right? So for my double up alerts, I'm looking to see if we get back above 143. There's enough volatility that perhaps this week it gets there. There's a 147. I'm going to move this down to 143. That'd be my sell put level. Okay, so if it crosses 143, I've got a credit spread profit, which actually finances my long call at 150. The long call at 150 looks like trash right now. It's essentially worthless. So if it goes lower, that's fine. The one thing I will do on these accounts here, you can see these trades. I'm willing to take some ownership of NVIDIA. Okay, so if I do take any shares of NVIDIA, my break even on this one would be, this is a ratio spread. My break even would be 125.43. On this one, this is a credit spread. My break even would be around 137.50. And if it goes any lower than that, I can also use my long put for protection. Okay. So in a way, it's like if we drop harder on NVIDIA, I might just take the assignment, immediately add a collar to this one, have a break even, get it called away, protect the downside, and still net this position out to be, I mean, ideally I'd try to make about $500 to repair it. So if I lose $100 or $200 on a call option, big deal. I'll repair it with some ownership and some covered calls. So I'm keeping a close eye on this one, and I've said this for the last couple of months. With this stretch away move from the 200 moving average, and this stretch away from the 200 moving average, and this bar count, I'm going to make a bold play right now. Okay, a bold play is that I don't think Nvidia cracks the all-time high until we hit the 200 moving average. Okay, Now, am I going to put a trade on that? No, but I'm just going to make that as a little prediction right now to say that we're probably not going to hit all-time highs until we hit the 200 moving average first. So what would I rather wait for? I'd rather wait for opportunities to invest at these levels, and then you can target the all-time high with, a decent amount of conviction, and hopefully we're getting back up to 145, 150 again. So that to me is a much better trade than trying to grind in this short-term chop when maybe it works out, maybe it doesn't. Okay, but I don't know. We can put a pin in this one, right? Like 3:57 p.m. on December 10th. Chris said that it would hit the 200 moving average before it hits all-time highs at 153. Okay, in fact, I'll do it right now. 12. Oops. Let's go text box here. 12:10 at 3:57 p.m. proclamation. Am I spelling that right? I'll just put proclaim. NVIDIA hits 200 EMA on daily before all-time highs. And I'll put a vertical line right here to timestamp that. There. Okay, so I have it on the chart as reference. All right. So we'll see what happens. If I take a loss on NVIDIA for my 150 call, it's fine. If we get lucky enough to get it back to 143, that's cool. We can finance it, carve out a break even on the trade. If it goes to the downside and I lose, I've got other trades in the mix out to next Friday and the 27th. There's going to be more trades to make up for it. But also on these trades, I will evaluate. A 2 to 4 week option can get me like $4 to $5 of credit. So even if I take ownership at 125, I can add a covered call and probably lower my cost basis to 120. After that, I lower it again. I can lower it to maybe, 118 or 117 or 115. So I will be pretty aggressive on the covered calls. And what's nice is I would happily take some NVIDIA anywhere around like 110 to 100. I'm going to own some shares. I don't mind owning shares right there at all. Okay. And do I have enough to, see a bounce that gets me up $5, $10, $15, $20? Sure. If I get lucky enough and I stay out of the way, then maybe I can turn this into a $1,000 winner. And, that takes a lot of heat off those little, paper cuts at $50 to $100. Okay. Final minute. Papa John, you up above your 60-35? You are. By those whiskers, man. Looking pretty good. Okay. Final minute. Green candle looking good. Yep. All right. Let's see if it stays right there for you. All right, everybody, we need to cheer on Papa John 60-30. He's right there. That's his line in the sand. That's your put side, right? 60-30 is your put side. So this is the beautiful thing about SPX being cash settled. There you go. Closing bell at 60-35. Nice work. Okay. So that's 4 for 4 on the day for you. Good stuff. Good stuff. All right. What else? Let's go just really quickly here. Apple. Let me go back to the daily time frame. Let's go Apple. Where are you? Here it is. So Apple, fresh all-time highs today. Amazon, a little bit of rejection off the 230 handle. Google, holy fudge, what just happened? What is the news? We had a dividend announcement on Google? That is crazy. Quantum computing breakthrough with Willow chip. I did see that. Oh man, that's nuts. Son of a, when did that happen? I mean, it gapped open today. Yeah, I looked at my liquidity levels today. It was already up. I didn't really have a trade. I mean, I've got like, let me just check my Google positions. I got a bunch of trades on Google. They should be in a bunch of profit already, but so right now I'm up around $6,100 on Google. A lot of ratio spreads, a lot of credit spreads, a lot of sell puts, cash secured puts. Yeah, it's out there, but anyway, it's in profit. Just let it do its thing. But I was pretty interested in seeing Google try to get back to the all-time highs, and looks like it's capable of doing that. Yep. So, I mean, look, that's big news. I mean, if this market pushes up and there's some momentum there, then we're coming right back to those highs. We'll probably blow through those highs. Apple's broken the highs pretty nicely. Netflix, Meta's broken highs all year. Yeah, I mean, NVIDIA's been testing that 150 to 155 level. but Google can probably run right to those highs. Tesla, same thing, around that 415 level. So just a good technical spot. Meta, just shy of the all-time highs. Microsoft still doing its thing. I need to stay above 435. This one's got to be close to profit. I know it's closing bell right now, but I want to look. So Microsoft, 430 by 435. I'm up 185 bucks. What's my max profit on this one? I think a max profit's like $200. So 1927 minus 1662, 265 minus 5 is 235. So my max profit is 235. I'm up $185 on this trade. 185 divided by 235. That's about 78.7% of the profit. I might just close this tomorrow morning. I might. And that just eliminates the Fed, any type of outlier risk. If we drop $8, I'd be on the hook. I don't want to own the shares at $435. There's no assignment risk, but I don't have a plan B on this one, so I'm just going to take the profit. So I'll look to close out Microsoft tomorrow. That'll be a little note to self. And then on Netflix, I'm just waiting for a dip and a pullback to dollar cost average in NVIDIA. Like I said, I've got a couple of trades trying to get back to 143 to 150. I doubt we're getting to 150 this week. 143 might be in the cards if we have another uptick for the market to finish Friday. If not, we drop lower. I'm looking at taking some assignment next Friday or by the end of the year. And if I take some assignment, I'm gonna drive that cost down aggressively down to like 115 or 110 and try to repair this thing for maybe $5 or $10 net profit. Tesla up to some fresh highs, not quite at all-time highs, but we're right there, 415 all-time highs. So keep an eye on Tesla. I've got a bunch of trades in on Tesla too. Don't have any stock, don't have any ownership, but still a decent chunk of profit. Tesla is up around $10,000. So plenty of trades, plenty of options. Trying to get them to close out. Most of them expire by the end of the year, and I'm looking pretty good for that trade. Berkshire, probably another one that I'd be keeping a close eye on, somewhere in here. If we come back to that 440 level, probably just some credit spreads. Just look at a range trade on Berkshire. CAVA, I don't know. Profit taking. Restaurants. What is this one? Zoe's Kitchen. It just looks like a stock that should be pulling back. There's not a lot of history here. It goes back to 2023. If I go to Simply Wall Street, take a look at CAVA. Big insider selling the last 3 months, became profitable, earnings forecast to grow. Let's look at price to earnings, price to sales. Very expensive on price to earnings. Fair value is down to $100. So I just think this is just a necessary fundamental reversion. We come back into $100. I wouldn't mind it, right? Somewhere in there, in the low 100s, come back and hit the 200 moving average and look to see if we can resume the uptrend. So yeah, just wait. Global ad revenue may exceed 1 trillion. Sure. Google's a powerhouse. It's silly to think like, it's something I don't want to own. Look, there's nothing wrong with any of these Mag 7 stocks. Literally, like Apple, Amazon, Google, Meta. Are they always going to perform at 15, 20, 25% a year? Probably not. Okay. But it's hard to argue that if we're in a bull market, these are probably going to do just fine. If we're in a bear market, these are also going to be vulnerable to everything else. So in this environment, when everything's up, Mag 7 has been a huge performer, and it has been for the last decade. It's been an integral part to this aggressive bull market that we've seen. The Mag 7, there's a reason they're rebalancing the whole freaking S&P and the NASDAQ, because they're so big, their market cap is taking up like 20, 30% of the S&P and the NASDAQ. It's embarrassing how large these are, but it serves a purpose. Like market cap weighting, if these stocks do well and everything else takes the nosedive, they're good enough to stay resilient and still get to all-time highs. That's what's crazy. And so, if you have your strongest companies and largest companies in the world performing well, they pretty much carry the slack of everybody else. right? So they're either the trailblazers lead the way and then everything else can broaden out, or they're just going to carry the torch while everyone else struggles. It's pretty impressive, you know. But it's hard to argue like, yeah, Nvidia probably won't stay at a 30 multiple forever, you know. But I also think that these are all pretty attractive stocks to have longer term. Okay, so Amazon, same thing. Amazon hit 230. I have a covered call up to 220, and my break even on Amazon's like 138. So I've got a nice chunk of profit on Amazon. Haven't taken the profit yet. I'm still looking to see if I can maybe add some protection just to be on the safe side. Um, let's see. I'll probably revisit that long put just to be safe. But I've rolled this out and up. I've got March up to 220. Lowered my break even a little bit more. So, I mean, if it gets called away, it's fine. I get it called away for like a $90 per share credit or profit, and I'm on, several hundred shares of ownership, so it pays pretty well. All right. Anyway, I think I'm going to wrap things up today for the final hour, and I'll see you tomorrow. Okay, tomorrow, real quick. Economic news in the morning, 8:30 a.m. Eastern time. Keep an eye on those CPI numbers. This is going to be the calendar that I want to reference because this gives us our core CPI year over year and our CPI year over year. So these are the two numbers that I'm watching. Are we printing hotter than forecast, at forecast, lesser than forecast? I don't know. Does Google settle the legal issue? It's always going to keep happening. The government's going to probe Mag 7 stocks for eternity. They're probably never going to win anything, but it's going to make headlines. I mean, they are so powerful. I don't think there's any way that it's going to be like, oh, Google's going to have to dismantle. I mean, maybe they just can't buy all their competitors, but I mean, it's been an ongoing thing. There's always government probes and antitrust and monopoly things, but whatever. I mean, honestly, Google and look, Mag 7 could buy the whole freaking government if they wanted to. I'd rather invest in those companies than invest in the U.S. government. If I could own a bond in Apple, I'd rather own a bond in Apple than the U.S. Treasury. There's at least real cash behind it. But again, you got to play by the U.S. government rules, and so I'm sure they can do some creative accounting to ruin entire companies. But most likely, it's too big to fail. Banks are too big to fail. Happened in 2008 with bailouts. Tech companies probably too big to fail. I think our economy owes, Google and Meta, Microsoft, Apple. I think they owe them a tremendous amount of credit for what they've done for this, this economy the last, decade plus. So anyway, and moving forward in the AI space and the arms race and getting AI infrastructure, any type of energy efficiencies, they're probably going to play in that, and they'll dabble in that arena too. So it's like they're a force to be reckoned with for sure. All right. Anyway, I'll let you go for today. Thanks for being with me. Before you go, kindly hit the thumbs up button. I appreciate that. If you're not subscribed to the channel, you can do so. If you want to get into my free channels here, Telegram and Discord, I'll post that right now. So here is my free Telegram, Chris Pulver Telegram. There's the link, and then my Chris Pulver Discord. Chris Pulver Discord. Okay, quickest disclaimer on the Discord. If you come to my server, it's Chris Pulver Trading. I have public channels. You can contact me there. I don't send friend requests. I don't send direct messages. If you message me personally, I will respond. But if you're immediately met with like some random, like, is this Chris? It's not me. Okay, so just know that going into it. My Discord channel is mostly just public channels that I chime in and chat with members every day. Okay. All right, sounds good. And that being said, if you're on YouTube, kindly hit the thumbs up button for me, smash the like button, all that good stuff to help the algorithm, and I'll see you tomorrow. Okay. Jonathan, I took a future trade for you this week, man. I went long MES thinking of you. Okay, I've got a bear put spread on ES and MES and MQ and MNQ. Thinking of you. There's your futures trades. All right, see you tomorrow. Thanks, bye.